It's been announced that Redfin, the fifth largest lead generating machine for home purchases and home sellers, was purchased by one of the top online lenders in the country, Rocket. What does this mean to the mortgage industry? What does this mean to the consumer? Should we be excited? Should we be scared? Yes. Tune in. We're going to discuss. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC.
John Coleman.
Dio, what's poppin'?
John, I just did something for the first time ever.
I know, I forgot to put on your headphones.
I was like, why is the show sounding so weird? I don't have my freaking
forget,
headphones on.
Congratulations, man.
Holy cow. That's what happens when you spend 4 days in Cancun at an all-inclusive resort, followed up by attending a badass mortgage conference for the NBA of Kentucky in Louisville. Yeah, my ass is worn out, but I'm also at the same time like totally recharged.
There you go.
Yeah.
Your liver's not.
My liver is not. No, I had to like give my liver a day off yesterday.
Well, how much did you spend? What was the largest tab you racked up in Cancun?
Free 99. Damn. Yes, I had the luxury because you and I are employees of Lower.
Shout out Lower.
That's the brand that we support. That's the flag that we fly. That's the company that I'm excited to help build into the most admired mortgage company in America and a top lender in America. Like that shit excites me. This trip was everything my wife and I needed. Like, don't get me wrong. Like, we live in Florida. We already have great weather. I was not going to Cancun for the weather. Right. Now, the fact that it was free, it was paid for, and that the executive team wanted me to be a part of it so we could celebrate our top producers. Like, okay. Like, I love doing stuff like that. I love getting to know my new work family and to be able to synergize with them. And, you know, it's nothing like sitting at the bar for 2 hours talking shop while also drinking all-inclusive margaritas.
Amazing.
Yeah. So, no, it was a really great trip. I did not rack up any big bills. My biggest bill, because they didn't cover it, I had to pay for it out of my own pocket. Maybe I'll expense it. Who knows? Michelle and I went to the spa for like 3 hours. Indulged.
So that was clearly like $750 before tip.
It was a little bit less than that, actually.
Ooh.
Yeah, like because when I counted up the tip money plus the spa money, I think I spent less than $600.
What?
Yes, 3 days, 3 nights.
Wow.
The hotel is like it's Mousai, Musai. It wasn't in the heart of Cancun. It was like 30 minutes outside of Cancun.
Oh, nice.
But I would recommend it. Like, and we're not all inclusive, like go to the islands type person. That's why we live in Florida. When we go away, we go to the mountains.
Right.
But I would definitely recommend it. And it was needed from a work standpoint. Like I really needed that time with those people. So it was great. But then I landed and I went straight up to Kentucky and grateful. Everyone knows I love the Mortgage Bankers Association. I love supporting our industry. I think I'm up to like 16 speaking engagements this year. I have room for 8 more, by the way. I literally do. I'm willing to do 24 a year. Okay. I think I'm going to be doing something in Louisiana again. And the Michigan Mortgage Lenders has already booked me. So I guess that leaves me with a little bit less than 8 more. But I went up there. Kentucky booked me last year at some point. And shout out, by the way, Mitch Florence. Shout out to Caitlin Watkins. Shout out to Jason Heflin. Shout out to Kim with Arch MI, like, and everyone else that I probably have you know not written down their names, but we had dinner together. It was a great event. It was a great event, and I was able to kind of bring the funk a little bit, like bring the energy, do some coaching, do some teaching, try to inspire change. Then I hopped on the flight. Then I came home. So yesterday was like a day of giving my liver a day off. I gave it off on Sunday, which is when I flew home from Cancun, and I gave it off on Tuesday, which is when I flew home from Kentucky.
Go. Just to give you enough time to start training for your next decathlon or whatever the hell you do.
They're called Ironman competitions, John. It's basically a triathlon.
They're called Ironman competitions until someone else buys them out and renames it, similar to what today's topic is about.
Yeah, no, today's topic, we're going to jump right into it. I mean, so Redfin, like you'd have to be living under a rock if you don't know who Redfin is, all right? And Redfin is a disruptor in the real estate space, but Redfin entered the mortgage space about 7-8 years ago. They started by starting their own mortgage company, then they went and bought a mortgage company. But Redfin, if they do anything really well, is create content and generate leads. So Redfin, one of the top content creators in the real estate home buying space, one of the biggest lead generators in the real estate home buying space, was just purchased for like $1.75 billion
Let's go.
by Rocket, right? Rocket is and has been for over the past decade one of the top lenders in the entire country, right? We see their ads in the Super Bowl, but if you're a mortgage broker, you also have the opportunity to broker loans to Rocket, which means there are hundreds of thousands of homeowners who have their mortgage serviced by Rocket. And when they're ready to refinance, they're probably going to be reaching out to that servicer, at least to get a quote. And it's a whole lot exciting for the industry as a whole, and it's scary AF. AF. I almost said as, but AF for the entire industry. And I figured, you know what? Very topical. It's what's happening. I'm sure our listeners, our fan base, would love to hear the world according to Dio and JC. Like, what's our take on all of this? So let's spend some time talking about it.
All right, before you do, let's take some time to pay these bills.
All right. Today's show is sponsored by our friends over at FinLock. Shout out to Brian View, loan officers, branch managers, company owners. If you are not leveraging the power of FinLocker, if you are not partnered with FinLocker, take this as your wake-up call. FinLocker is phenomenal at incubating soon-to-be home owners early on in the stages of the home buying process so that you can create that client for life. For more information on FinLocker, make sure you go to their website, finlocker.com. That's FINLOCKER.com. Rocket.
Yeah, Rocket bought
Redfin.
Was that like their competition? Were they like buddies, or were like instead of competing with you, we're just going to buy you out?
Well, it depends. It depends. Shout out Danielle Anderson. That's her favorite two words in the mortgage industry. It depends on which lens you look at it for. Are they their competition? Well, if the competition is in who can attract the most eyeballs, then 100% Redfin was a competitor to Rocket, right? Redfin was a competitor to Rocket because they both compete for eyeballs, clicks, right? People to go to their website and consume their material. So in that case, yes. Now, were they really competitors? No, Redfin is more of a real estate play, although they had a small iBuying division and they did mortgage lending. They did mortgage lending nowhere near what Rocket does. And, you know, Rocket has some partnerships within the real estate world, but no one would ever say, oh, Rocket's a real estate company, where Redfin is a real estate company. And Redfin tried to disrupt real estate because their model was one in which we're going to create the content, generate the leads, and we're going to have salaried real estate agents. Usually real estate agents are 1099. They're self-contractors, and they're 100% commission. And Redfin's model was, no, we don't necessarily need that. If we can generate the leads, we can push the leads down to these salesmen and women who are licensed real estate agents, and we can pay them a salary plus bonuses on various KPIs. Now, if you talk to people who used to work at Redfin, what they would say is that although that business model worked, they found it worked better when they actually pushed those leads down to 100% commission 1099 real estate agents versus the salaried ones. So you'd find a lot of times the salaried ones were the ones that would take the listings. They'd represent the sellers, but the buyer leads had to be pushed down to what you would say your more traditional real estate agent.
Okay.
Yep. So I would say it depends because, yes, they compete on eyeballs and views and clicks. No, one's a real estate company and one's a mortgage company. So in that instance, it's like it's a really good marriage. And I'm pretty confident Redfin had gone public. So that meant that Rocket has to purchase all of that stock and compensate all of the owners of the common shares. And I don't know if there's going to do an exchange like, oh, if you owned $10,000 worth of Redfin stock, you now get $10,000 worth of Rocket stock. It may be a stock exchange or an all stock sale. I'll let those that really specialize in merger and acquisition to understand those details. Us and our audience, it's kind of irrelevant for what we're going to talk about.
Okay.
All right. So that's that. what does this signal to the market? Like, that's a normal question most people have. Like, okay, what does this mean to me? I think this means what you and I have been talking about for the past 7-8 months, hybrid loan officers, right? The reason why after 15 years, I felt it was necessary to uproot from a company that I love and people that I love and go to a new employer. That there is a changing of the guard. I mean, it's you and I and what we're doing with TLOP's coaching. It's a changing of the guard, right? There's been companies and men and women who did a phenomenal job of shaping the future of mortgage lending back when it was the early 2000s. But now that we're in the mid 2020s, it's somebody else's turn. There's a changing of the guard. That change in the guard, by the way, is TLOP, right? You go to our website, you attend our free master classes, you become a member of the coaching community. You go through one of our 16-week boot camps, right? Like, that's what we're going to be doing over the next decade. I think what we're going to see in the mortgage industry is two things. You're going to see two things happen. And by the way, history doesn't repeat itself, but it rhymes, right? That's a Mark Twain-ism. So what I'm getting ready to say, I'm not saying this is the first time this has ever happened. I'm like, no, this has happened in other industries. It's just our industry's turn to go through this process. I believe still today more than ever because of this acquisition, when we fast forward just 3 or 5 years, you're going to have two major players in mortgage, and not two companies, two types of companies.
Okay.
You're either going to be large, robust, all in national top 10 mortgage company who has other services to provide, or you're going to be super small, hyper local, elite, boutique, boots on the ground, mom and pop brokerage. I think the people in the middle are going to get lost.
Can you give me some examples of who would be in the middle, like, you know, in companies? Like, give me.
I would rather not use company names.
Okay.
Okay. But let me say types of companies.
Okay. Yeah.
All right. Companies that are funding somewhere between 600 million and 2.4 billion in volume, and they don't have a path, a vision, or the capital to be able to go all in, I think can get lost. Now, I think for companies like the one you and I represent, that could be an opportunity for us to embrace those companies to fold into us, right? And others that have the capital, that have the vision, that are out there trying to be a part of the future of lending. Like, future of lending to me is, I'm focused on 2030. I'm not staring back at 2010, right? I'm not saying I can't continue to operate successfully using a 2010 model, but what I'm saying is that 2010 model has to be tricked out, juiced up, and it needs to represent the future. I mean, just think about what a car was like in 2010 versus a car today. Like, in those 15 years, not every car in 2010 had a backup camera. Cars in 2010 still had like CDs, CD players. You know, it's like we don't have that today. The self-driving, I mean, it's like all the safety features and the cool technology. It's the mortgage industry is going to have that same type of disruption. So I would say that 600 million to 2.4 billion, and you don't have a vision. Like, you may be doing 600 million, but you're like, have you met our founders? Right? Like, we're currently raising money. Have you seen our tech stack? Have you seen our content? Okay, cool. You may be that company that no one has ever heard of, but in 5 years, you're that company that's going public, and you're that company that everybody is like chasing to catch up with. So no, the two different models is going to be the mega, right? And that's, what are you doing to be able to create content in order to capture views, capture clicks, capture data, and then what are you doing to incubate that data? Because it's a race to the consumer. It's a race to gather the most amount of data. Once you have that data, you better have a product or a service that you can provide so that you keep all of that data that belongs to a human being inside of your web, right? It's all about keeping people like there forever. So like, what is Rocket doing with this Redfin? Let me just walk you through it. I don't know this. I haven't sat down to hang out with anybody from Rocket yet or anybody from Redfin, but I would love to have you on the show. If you or someone you know is tuning in, let's make the connect and let's sit down and talk about it. It'd be a heck of an interview. But this is what I'm telling you they're trying to do. They're trying to get to the home buyer 2-3 years before they ever become a home buyer. And they want them coming to their sites, clicking, staying on, they're capturing data, they're retargeting them with ads so that when they need help, Rocket or the Rocket company is going to have a product. If they need credit repair, Rocket's going to have a credit repair. If they need to build credit, Rocket's going to have a credit card that's going to help somebody build credit. And then when they need to put together a game plan for purchasing, like something similar to what our friends over at FinLocker do, then Rocket's going to have an app that they can use that's going to help them do things like cash flow analysis or figure out budgeting so that they can prepare to one day become a homeowner. Then once they become a homeowner or they want to become a homeowner, well, Rocket's going to be able to refer them to a real estate agent. Rocket's going to be able to do their mortgage, or maybe Rocket's going to refer them to a local mortgage broker that partners with them. And then now all of a sudden, Rocket's going to capture the real estate transaction. They're also going to capture the mortgage. Well, if you're doing real estate and mortgage, you might as well do insurance too, because you're going to need homeowners insurance on that home you're buying. So now they're going to capture their homeowners insurance. Once they get their homeowners insurance, well, why not sell you some auto insurance? Because maybe I can look at what you're currently paying in auto insurance, and then maybe I can offer you something better. Now that once you're a homeowner, you know what you're probably going to need at some point, John? Home repairs, home remodels, maybe some home warranties. Have it an alarm system. Have it a Ring camera. But we'll call it a Rocket camera. Right? I have your data. I have your information. You're already shopping from my store. Why should I not walk you down to the next department? And then because Rocket has that data, Rocket's also going to know based on life events, based on your spending habits, based on so many other data analytics, they're going to know when it's time for you to sell. They're going to know when you're going to be most likely to buy again. And all of a sudden, when you log into the internet or you log onto your social media, you're getting ads from Rocket. You're like, yes, how do they know I'm going to be buying a house? I haven't even told my spouse I want to buy a house yet, but they already know. And at this point, like, it's game over. It truly is game over. So you have two choices. You can be the anti-Rocket, or you can try to compete, right? Like, do I want to be like, I'm not even playing in the soda game. Not even going to do it. I'm selling lemonade, right? Or, let Rocket be Coke. I can be Pepsi.
Does this signal like the beginning of like a monopoly where like 10 years from now, there's only going to be like 2 mortgage companies on the whole planet, similar to what telecommunications has become?
That is a fantastic question. And I would tell people to look at industries like telecommunication. I would tell people to look at industries like banking. Like, go run these numbers. What did banking look like just 20, 30 years ago? And what does banking look like today? There's not that many regional players in banking anymore. Like, you're either a small local bank or credit union, or you are a big ass national player. Like, that's the way of banking. Why would we in the mortgage industry think we were going to go any way different than the way of banking? No, I believe 100% that's where we're going. I believe that the top 10 lenders will do 30, 40% of all of the volume, the mortgage volume. I really do. And I think the other spectrum is, I'm not going to be that. I don't want to be that. So, you know what I want to do is, like, I literally want to be the number one lender in my city. Not the number one lender in the country, the number one lender in my city. I want to dominate my city, whether it's Winter Springs, Florida, whether it's DeKalb, Illinois, San Jose, California, like Abilene, Texas. It don't matter. Like, you're just going to be the best. And that means every local financial advisor knows you. Every local home builder knows you. The local realtors love you. And the community you serve, whether it's the PTA or it's your place of worship, like, those men and women just know. It's kind of like the Andy Griffith show. They just know that you're the guy or you're the girl. And I think there's going to be a consumers that want that. Like, they want
100%.
They want to know that the company that they're working with is, like, not just like made in America. It's like, no, it's made in my backyard.
Right.
Like, it is right here. Now, you may be brokering your loan to Rocket still, you know.
Yeah.
But but the actual servicing is going to be done. The brand, everything's going to be hyper local, which means you're still going to be boutique and super elite, because if you're not elite, you're not going to stand out, right? So then it's like, well, what do I have to do to be elite? So there's some things that all of us can learn from this Rocket Redfin acquisition. In fact, Rebecca Richardson, she's coming on to coach with TLOP. She's doing her first call for us, and we're making it free. Like, we're making a big splash. We want the world to get to know Rebecca the way that we've gotten to know her. And Rebecca is one of the most influential mortgage originators on social media, like hundreds of thousands of followers. A third of her business is generated from the content she creates. And I saw a post that she had recently on LinkedIn, and I'm like, hell yeah, Rebecca. Like, this is our wake-up call as originators, that if Rocket feels the need to buy Redfin, we should feel the need to also become content creators. We, as the loan originator, as the mortgage broker, we have to, not want to, have to make sure that we are connecting with the consumer first, that we are almost racing the clients we serve, our real estate agents. We're now racing them. It's a fun little race. It's not a I'm better than you race. It's just a race to get to the consumer first, because we want to be where they go for information. We want to be the source of information. We can't allow these big publicly traded hedge fund backed companies to take from us unless we want to go work for them. If we want to go work for them, then hey, so be it. But I think the rest of us, this is our wake up call.
So it sounds like the real winner in this is the consumer, because ultimately they'll have, a streamlined type of, experience when they go to purchase a home. How does this help or how does this help or hinder the loan officer? Is it just like news for them? Like, how can a loan officer take this merger news and use it to their benefit?
I mean, this should just be a wake up call.
Okay.
Like, there's no benefit to the consumer. I mean there's no benefit to the loan officer. To the consumer, I mean, look, we could argue pros and cons all day long, right? I mean, the bigger banks got, the consumers were like, oh, I'm so glad my bank got so big, they now serve me better. Yeah. Or it's like, nah, man, I'm just a number. Right? And there's going to be a component of, no, you're just a number. Or with a company that big that relies solely on technology and it's a numbers game, like, how experienced are the men and women going to be within those confines? Or is there a certain business model where they can find the best people willing to make what they're willing to pay, but they're not willing to pay higher to get the cream of the crop? So I don't know if the consumer would win or lose, right? I think different strokes, different folks. Some consumers are going to freaking love it, right? Like, my daughter and I love shopping on Amazon. My wife doesn't like anything about Amazon and refuses to give them business. So I think there's going to be plenty of people that hey, it was so easy, clicked a couple buttons, called this number, never had to talk to a human. There's others that are like, what? I can't talk to a human? Go F yourself.
Right.
I need to talk to somebody, and I need that person to be damn good and willing to meet me for coffee and meet me in person. So I just think that's why I say we'll have one or the other. Fast forward 3 or 5 years, you're either going to be a major player who you and your systems and your processes are truly content creation, lead generation, then lead incubation. Then once we create that lead into a loan, it's a true lender for life journey. So this is how serious I am about it. And by the way, if you're interested, I'm going to have room for not that many, but I'm going to have room to onboard 4 branches over the next 9 months that are going to want to tie into this system and this process that I'm getting ready to talk about. If you're interested, first name Dustin, last name LinkedIn. Wow. First name Dustin, last name Owen. No, hit me up on LinkedIn.
Yeah.
Hit me up on LinkedIn. I'll have a confidential conversation with you. It's not going to be for everybody, and we can't take everybody. But bandwidth, my team and I are going to have room for 4 branches, right? So that's branch manager, that's several LOs, and they're going to want to be a part of this. But this is how serious I am about what I'm doing. I have a meeting on Friday with our marketing guy at TLOP, Mike Siciliano, with 2 of my branch managers, with our partner, Stephen Barnett, and with Adam Weiner, who is the president of Lower, who, by the way, came from 15 years at Redfin.
See what we're doing here.
Okay, it's 15 years at Redfin.
Yeah.
And I've had this vision for years, and I'm taking what worked really well at my last mortgage company. Like, we built this and it became a bit of a fly trap. It attracted originators, it helped convert leads, it attracted realtors, and it kept originators wanting to stay within the system. That system was built in 2015. It needs to be updated big time. So I'm going to update it. It's probably going to take Mike and I, with Adam's team's help, 100 days. And then each quarter we're going to add on it. But just imagine this and sit with me for a minute, and then John and I will find a way to wrap this show up. But I'm going to give you my secrets right now. Okay, it starts this way. We have to be putting out content. That's websites, that's social, that gets to the consumer first. So that's something that we're going to work with Mike Siciliano and Adam Weiner on, something you and I know a thing or two about, creating content. And as we get them coming to us first, we need a way to incubate them. Well, that's the right business development reps, and that's the right type of CRM, all things that we're going to be building out. And then once those leads get turned into warm leads, or what I call pre-qualified leads, they then need to be pushed down to the branch or the originator. The branch and the originator then need to, A, introduce them to a local real estate agent, right? So now we have a thing of value to go forward to a relationship. But B, they now need to be dropped into a new system to incubate a pre-qualified lead into an actual sale, right? Because you create the content, and the content brings the eyeballs and the clicks. It may take 9, 12, 18 months before they're actually what is called a quality lead or a pre-qualified home buyer. But just because you're a pre-qualified home buyer doesn't mean you're going to buy right away. It may still take you 3, 6, or even 9 months. So I'm building out a 270-day prospect drip campaign for all of the pre-qualified leads. So 270 days, that's 9 months. It's going to be text, it's going to be email, and it's going to be inclusive of the agent that we've partnered them with or the agent that referred the business in. And then the minute that lead turns into a loan, we have a whole separate system. This is a in-process marketing that goes out to listing agent, buying agent, and borrower. Why? Well, because I want my loan officers, A, creating a lender for life relationship with their clients, but I also want the borrower to refer us their friends and family who are also looking to become homeowners. I want the listing agent to want to meet with my loan officer after we successfully close the transaction to talk about a business referral relationship. And I want the buying agent to go find another buyer who needs our services, right? So there's a rhyme and a reason for all of this. And then post-closing, right, the minute the loan funds, we're going to have a system and a team that's going to do things. These are all the things, by the way, I coach at all of our students and our members to do that are paying for us to be their business coach and their sales trainers. I then want, when the loan funds, we should be getting reviews, and shout out to experience.com. We should make them a show sponsor.
Sounds good.
But we're going to utilize a technology like experience.com. We're going to push that to Google reviews. We're going to be doing our first payment calls. By the way, all of these are opportunities to promote our brand, to get better SEO, to ask for referrals. Then we need to have a lender for life journey where we're sending birthday celebrations. We're doing 4 quarterly video. That's you and I probably have to work with the loan officers on this one, John, but 4 quarterly market update videos via email. We need to have a team that's scheduling for our loan officers on their calendar annual mortgage reviews with their past clients. And then even things like newsletters. Like, we coach great loan officers write and send a weekly newsletter. Well, in our system, we're going to make it easy, like almost like paint by numbers easy for our originators. So this is something that I have my first meeting this Friday. This is an idea that I've had for years. I mean, this idea helped me win the Future Leaders program at the MBA. It's a lot of what I had sex with. Sex.
Wow. You're really fucking up your words
really
today.
Fucking up the words. Success with at my previous employer.
No, his name is Dustin LinkedIn, and he loves to have sex. That's all he does.
And it's obviously, you can see how excited I am, right?
Right.
Like, I'm so excited. But why am I excited? Because this Redfin Rocket merger scares the shit out of me, and I need to find my own way to compete. And I also want to invite people to want to have success with us. And I know it's like in the field of dreams, if you build it, they will come. Yeah, we're going to build it. This is what we're doing. So I can't do it for everybody, especially when you're just launching. I mean, the goal would be you get the whole company and you get $10-20 billion a year in production, all following the same sales culture. But it's going to start with my main 5 branches.
Right.
Then we're going to invite 4 more branches to be a part of it. And then eventually we're going to hand select half a dozen branches that are already a part of the lower brand of families and let them be a part of it. And it's like anything that you scale, eventually you will be able to roll it out to the entire masses. But in order to make sure you don't break it at first, that's why you have things like, early adopters and you have beta testers. The good news is it's not so much of a beta test when we had proof of concept for 15 years out of my prior employer. I just had to rebuild it. And this time I'm going to rebuild it for the 2030s, not when I first built it with my partner, Mike Smalley, and a couple other people. We built it in 2012, 2013.
Right.
Yep. So I think that's where people's brains need to be going. And that's the type of thought process they need to have. And it's like following 30-10-5-5-3-1 that we coach our students. Why is that? That's about creating content. That's about being hyper focused and hyper local with the men and women that already follow you so that they see you as a subject matter expert. You are the source of information. That's what we all need to do. And that is what this type of acquisition is going to force us to either evolve or, quite honestly, retire. Like, maybe you want to retire. Maybe it's time for you to be like, yep, this was a hell of a run. I'm done.
Hang them up.
If it's not, then please know, if you don't go one direction or the other, right? Go big or go home, or get hyper boutique-y, hyper local. If you try to stay in the middle, in the religious world, they call that place purgatory. I don't think purgatory sounds like a good place to be, and not somewhere that I'd want to be if I have another 7, 10, or 20 years left in my career.
I'm the best damn mortgage brokerage on this street, Dustin. Come holler at me.
Sweet. And you know what, John? You should be, but you still have to create content. You still have to have a badass CRM. You still need to race to get to the consumer. Yes, like but you can do that. You can be boutique and nimble. You can fund your 15, 20 loans a month. You can still make great income by doing so. But if you're trying to be anything larger than that,
right,
I think that's when it's going to be it becomes a scalability issue. You just don't do enough loans. You don't make enough money to compete at the high level. Right. That's what it becomes. It's like trying to be a small market team in professional sports. I'm not saying a small market team can't win championships.
Shout out Tampa Bay Rays.
They still haven't won.
I know, but
they still haven't won. Yeah, but it's like, but why do we talk about the Tampa Bay Rays?
Because they're a small boutique team that shouldn't even exist.
Yeah, and they do well.
Yeah.
But very few others do well.
Right.
Yeah, I think something similar is what's transpiring in the mortgage industry. And this is a bit of a shot across the bow, wake up call.
Right.
This shit's really happening, y'all. Let's get serious about it.
Well said, Dustin.
Awesome. Hey, thank you so much for tuning in. Here's the deal. If you like what we're doing, you got to share us, because sharing is caring. Not once, not twice, but 3 different times to a friend, coworker, or a colleague. If you listen on Apple or Spotify, make sure you give us a 5-star review. And if you haven't done so already, please go over to the TLOP YouTube channel, TLOP, the Loan Officer Podcast. You see what I did with that? And subscribe to our YouTube channel. It's more than just a podcast when you do it on YouTube. It's a experience, as well as you can access additional training videos on our YouTube channel. Go to our website, subscribe to my newsletter. It's tloponline.com is the website. Subscribe to the newsletter. I write it every single week. I send it out. It is known as one of the best newsletters for originators, bar none. And if you don't believe me,
eat shit.
There you go. He's John Coleman. I'm Dustin Ohm. That's all the time we have for you today. We do look forward to catching you in the next episode. Peace.